This is the truth about Terra Luna.
We're going to give you all the necessary information about Terra Luna, and is right now the good time to buy.
Welcome to the Bean Pod. This is your place for all things stocks and crypto. From beginner tips to expert picks. Use this as fuel for your investing journey, because when you're in the know, your money will grow.
The Bean Pod is presented by DAOmaker, the top crypto launchpad in the industry.
DAOmaker allows people to participate in top crypto projects before they launch and generate some of the best returns you can find anywhere.
They also provide growth solutions for crypto projects that are looking for funding and assistance with marketing.
With their revolutionary new public strongholder offerings, everyone can get early access to top crypto projects regardless of their net worth.
DAOmaker is rapidly disrupting the venture capital industry. If you're interested, head over to DAOmaker.com to learn more. This episode of the Bean Pod is sponsored by KyberSwap.
KyberSwap is a DEX and DEX aggregator which is built to facilitate all your DeFi needs in one single platform.
Fast, cheap, and safe.
User experience is KyberSwap's sole focus to make everyone's life better in DeFi. Welcome to the Bean Pod. This is Shane, aka the Jolly Green Investor.
And this is Josh, the Nifty Investor.
Today, we're going to tell the truth about Terra Luna.
There's a lot going on with this ecosystem right now. Is right now the time to buy, or should we avoid it altogether?
All right, so it's been the hottest topic over the crypto markets over the past 2 weeks or so. We saw Luna crash from a $60 billion market cap almost to zero. 99.9% down. Wow.
Trading at, it was 120 bucks or something, all the way down to what, a fraction of a penny?
It's a meme coin at this point. It's
Yeah.
0.0001. And now you have the same meme coin people saying, imagine if Luna goes to $1. We're going to tell you in the middle of the episode if we think it's a good buy. But first, let's kind of explain what happened. I think it's important for everyone to understand how this went down so they can spot things like this in the future, right?
Yeah, maybe we could also give a very quick introduction to what Terra is.
Yeah, for sure.
As a blockchain and what made it so unique in the first place.
Definitely.
So there was a few benefits to it, and I kind of saw. So Do Kwon is one of the founders of this, revolutionary blockchain, and it was designed to be interoperable, meaning you could run the platform across multiple blockchains. It was designed to be programmable, so developers could jump onto the network and start developing the ecosystem. And it was designed for instant settlements and cross-border payments as well.
Right, so it has all the buzzwords covered.
Exactly. And that's what was bringing people to this ecosystem.
Right.
And then, you have, so Terraform Labs is the actual ecosystem. And then you have Luna, which is the token of the ecosystem.
Right. And then UST, which was their stable coin, right?
Coin.
So the killer app of the Terra Luna ecosystem, really the only consumer-facing thing at the time, was Anchor Protocol, right? So everyone was dumping their funds into Anchor Protocol. It was giving these 20% yields, right? 20% APY on stablecoin UST deposits, which, it ruffled a few feathers. People were saying, is that really sustainable? Is 20% yield really sustainable? Well, it turns out it wasn't. And, that's why it all unraveled, because it does get quite complicated when you really look into what happened. So we'll try to put it into simple terms. But basically, when people started taking the reserves out of Anchor Protocol, the UST, because the interest rate started to drop. So 20% became 17%, became 15%. And then as the interest rate started to drop, people were taking the UST out and they were selling it. They were selling it, right? And then all of a sudden, a massive run on UST sales happened. So people were selling UST, and the mechanism that they built is called burn and mint. So when people sell UST, it expands the supply of Luna, which that's what we saw happen at a rapid pace, which kind of led to the price decline.
Yeah. So the idea is to keep it to a $1 peg, right? It allows you to have a stable coin within the ecosystem that can be settled and utilized amongst all the other platforms within this ecosystem. And the importance of keeping a peg and keeping it to the $1 is that that it's always going to be $1 and you can use it within the ecosystem. As soon as it goes down to 98 cents, 97 cents, 96 cents, it's losing everything that it's meant to be. There's an opportunity for, and this is kind of what can make it spiral into the death spiral, is if the peg goes above, if let's say it goes to $1.01, then you can sell it back, burn it, bring it back to $1.
Yeah, arbitrage, right?
Arbitrage.
Yeah.
So this is when, big whales can actually generate some money, because 1 cent with $1 billion it's a lot of money.
For sure.
And then if it goes below a peg, if it goes below the peg, under $1 and goes down to like 98 cents or 99 cents, you can send it back and then again try to bring it back to that $1, and that's what the Luna's for.
Right.
It's a constant rebalancing act. But as soon as you start to stretch a little bit too far the one way, it starts to wobble and goes back and forth, and it creates this death spiral, which there's been several other algorithmic backed stablecoins which have yet to succeed. And this is just another one that kind of bit the dust.
For sure. So you can imagine it kind of just got depegged a little bit. And then everyone saw that they wanted to get out, and these whales were taking advantage of it. So on Curve Protocol, which was the #1 stablecoin exchange, they were hit with a massive flood of UST, billions of UST. So now Curve Protocol is holding all this UST, and they have to devalue it in order to get rid of it, which only makes the depeg stronger, right? So that's the death spiral. And then people want to get out of UST. And as I mentioned before, the more people are selling UST, the more Luna is being minted. So now the price of Luna is falling because there's more supply of Luna being created. Billions and billions of Luna are being created. So the price of UST is falling, the price of Luna is falling. And because unlike other stable coins, it's not actually backed by fiat currency or treasuries or bonds, it's backed by Bitcoin. They then have to sell their Bitcoin to try to hold up the peg. And the price of Bitcoin is already falling, which kind of started this in the first place. So it is that death spiral. And then they sold, I think, 80,000 or 120,000 of their Bitcoin over the past 2 weeks, which has only contributed to the price decline of Bitcoin. So it's really been a shitty situation for the whole crypto industry. And I feel for a lot of the Luna holders.
Yeah. And you also have other people kind of jumping in now as well, thinking, and I'm thinking too, I'm like, yeah, you know what? Let's just throw a couple bucks in. And if it ever goes back up, if they save the ecosystem, if Do Kwon brings up this elaborate plan, what if it goes up to even 10 cents, buying it at 0.001, that's still a 10,000% gain, right?
I mean, yeah.
But it's also very dangerous at the same time because they're minting new tokens so that if it went up to like 10 cents, it's still, it's like a market cap of like, 100 billion or something like that.
For sure. Where it is right now, is it a good buy? We'll leave that towards later in the episode, but I think we should quickly talk about a few of the conspiracy theories that were around it. Like people came out and said BlackRock and Citadel Securities, they were behind this attack. They wanted to take down the UST stablecoin. So the conspiracy theory is BlackRock and Citadel are early investors in Circle, which is the company behind USDC, one of the other most popular stablecoins. So the theory is they wanted to take out UST because they saw it as a big competitor to USDC. So you can see on the blockchain that someone was buying up about $1 billion of UST in the lead up to the event, and then began to short Bitcoin because they knew that if they shorted Bitcoin enough and the price of Bitcoin started to decline, then it would cause this kind of wobble, and they could take advantage of it by then dumping all their UST onto Curve, and it worked. Now, whether this person or people or group was connected to BlackRock or Citadel, we'll never know. They have obviously denied their involvement in the scandal, if you will, but it is interesting that someone kind of figured out this exploit in the algorithmic stablecoin, and they acted, and hell, they took them down.
Yeah, I mean, so this happened on May 7th is when the depegging began.
Right.
Is it a coordinated attack, or is it a series of panic withdrawals because the price of Bitcoin was declining? It's tough to tell. Before we started this podcast today, I did see this tweet that came out. Basically, it was highlighting the fact that, so you have the Luna Foundation Guard, LFG, operates a reserve pool backing UST and Luna. They were able to sell $2.7 billion in face value at UST at 100 cent at the 100% mark. So at $1.
Right.
They were sold in 2 transactions. It's looking like it's a backdoor deal that occurred, and it was only on the secondary market where retailers were able to sell at 60 cents. So 2 massive transactions at 2.7 billion were sold before this all happened. So
someone always knows, right?
Yeah, it's looking like there's a bit of people knew behind the scenes.
I feel like if you're behind a project like this, you can see what's coming, especially as the price of Bitcoin even just started to slide, even before the actual crash. Do I think that BlackRock and Citadel took them down? Probably not. The whole thing about the stablecoin being backed by Bitcoin and then Bitcoin crashing, and then as we kind of detailed before, there's this death spiral of people getting rid of UST and Luna. It all kind of, I think the whole algorithmic stablecoin thing, it just doesn't work. There was a project that did the same thing back in 2017 or 2018, and almost a similar thing happened. And people have short memories, right? They forget. Most people that are in the crypto markets right now were not around back then. So it's an experiment that we've seen fail once, fail twice.
Yeah, Safecoin, BitUSD, Nubits.
Yeah.
Funny enough, Doquan was also behind another one called it's called Basis Cash. So he started this one. It emerged on the Ethereum network in 2020. It lost its peg a year later.
Right.
Yeah, I think it's now trading down like 17 cents or something. So
damn.
This is leaked information as well through other developers he was working with who were on his team. And they anonymously came out and said that, yeah, he was also the founder of Basis Cash, which also failed as a... So we're looking at 10 plus different algorithmically backed stablecoins that have yet to succeed. So if you do the math and you understand how it works, and then as soon as something's backed by Bitcoin to keep this peg stable, you can start to manipulate it a bit, right?
For sure.
And create that death spiral.
And if you're looking for other projects that you could potentially short at the moment in the current market that have similar structures, there's ones we've been talking about. Tron, TRX, has a algorithmically backed stablecoin. Phantom, another project that's in deep shit because their top developer left and they've been in a death spiral of their own on their token price. Those are two ones I'm looking at right now for potential shorts, TRX and Phantom, that have similar structures in their algorithmically backed stablecoin that could fail. And Justin Sun from Tron, he knew this right away when it happened with Luna. I think they raised $2 billion for protection, or Tron.
So. Yeah, right. And they actually had a little bit of their peg got lost a little bit within the past 7 days. Yeah, it went down to 95 cents or so.
Exactly.
So there's a little bit of movement already in their USDD, I believe is the coin.
USDD, yep.
Yeah, so there's a little bit of movement already. I am currently shorting Tron.
Yeah, I think it's a good short-term play.
Yeah, definitely.
Just in case, right?
Yeah.
So what's the fallout from all this? Before we get to it, whether we think it's a good buy right now, what is the fallout? I think the main thing we're going to see is a sped up stablecoin regulation. Governments see this. We saw, thousands and thousands of people lose their life savings, millions of dollars. I think there was reports of 20 to 30 people taking their own lives because they had everything in Luna and it was all gone, right? So this can't continue. We're going to see government... Stablecoins was already one of the first things they were going to regulate, right? And now after an event like this is now made worldwide news. Shit is not... Like, this is over, right?
I think it's also going to push people towards better projects as well and ensure that they're doing the research ahead of time. I think it's going to push more people into Bitcoin. And you can see how less volatile Bitcoin is. When Bitcoin drops 20%, everything else drops 50%, 60%, right? You look at a lot of these altcoins that we have discussed, and although there is a lot of reward, there's also a lot of risk. And I think this has put the fear of God into a lot of investors. I think it might also slow down institutional adoption slightly, just because of what has happened. Because Terra created this ecosystem, and it was actually being utilized by merchants around the world. Like, there was actual adoption. So you got to think about the merchants who are also on this platform. The next time they come into the space, where are they going to go? And it's almost like the institutional adoption will slow slightly because they're going to want to see that everything is running smoothly on Ethereum, let's say. You know what I mean?
Yep.
And I think it's going to lead more people to go to Ethereum or, a really well-trusted blockchain versus anything that's experimental.
I think, yeah, you're right. The more people get burnt in crypto, the more they gravitate towards the very cream of the crop. So Bitcoin, Ethereum, basically that's it at the moment, right? Because these networks don't go down like Solana. They don't get hacked. They don't have death spirals. They don't have stable coins that are backed by Bitcoin or algorithms. So I think we're going to see regulation come in hard for stable coins. Some people are saying that the days of 5, 10, 15, 20% yield, those days are numbered. Probably over the next couple of years, that's going to be taken away. So, if you are able to stake your stable coins right now for 10%, enjoy it now. It may not last. All it really took was one big event for the government to say, okay, this is fucking ridiculous.
Yeah.
Right? These 1 million billion % APY time, whatever, that's all over. So let's get to the final point then.
Well, there is a plan to, right before we film this podcast, I need to see what's going on with the ecosystem.
Revival plan?
Yeah. So Do Kwon has tweeted again a more recent plan, and what they're so he doesn't want to let this thing die, right?
It's his baby.
And that's the thing. He's receiving death threats. You know, people are going to his house and stuff.
Yeah.
I'm not sure if you've seen
It's
that.
brutal.
So basically, he doesn't want to see this die. I think people who are in the ecosystem currently don't want to see this die. What you are seeing currently, though, is there's other networks like VeChain is offering developers like $30,000 plus to migrate. I've seen Casper Network doing the exact same thing.
Right.
They're trying to attract because this ecosystem is now breaking down, right? So there's still really good developers on these other platforms. Now these other networks are now trying to bring them in,
Poaching
right?
them. Yeah.
But I think so with this new plan, basically they're going to create a fork, and the new chain won't have the algorithmically backed stablecoin. So they're going to have a new one called Luna, and the old chain is going to be called Luna Classic, Luna C, and they're all going to get airdropped, the new tokens. So it's pretty much going to be Terra 2.0.
Right.
So that's what he's looking to do at the moment.
Terra 2.0.
Yeah. So I don't know I think all faith is kind of lost in this.
Classic.
Yeah.
The current token.
I think all faith is lost. And I think Do Kwon has burned himself twice now. It would be tough for me as an investor to want to put money into this ecosystem
the new
moving
one?
forward. Yeah.
Yeah. I mean, for me, the current token is a 100% avoid. The fact that they're just continuing to mint millions upon millions upon millions of Luna tokens, you're just shoveling your money into a pit of fire. Because, you know, you'll see on Twitter, people are boasting about, I longed the bottom of Luna and it did at 700x in 24 hours. But what you don't see is the thousands of other people who longed their money into, you know, what they thought was the bottom. And people think, it's down 99.9%. The downside risk is minimal. But it can always go down another 99.9% from 0.001 to 0.00001.
Yeah.
And from there, add another couple of zeros. It's a death spiral, and it's continuing. And I just think that is it's a straight gamble. And there's a lot of gambling in crypto, and this is a gamble that I would not make.
Yeah, I'm not touching it either. I think it's all been lost. There's 20,000 other projects out there.
Yeah.
You can burn your money on. So why put your money into something that's already demonstrated failure twice?
Yeah.
I don't know. I think I'd stay away from it.
I think there's important lessons to be learned here. Do the research on the project. Look at the founder. Look at what he's done in the past. And any of these high APY, high yield, stablecoin staking, these platforms, very, very risky. And now we know exactly why, because you can lose 99.9% of your money within a day.
Yeah. So that's kind of what's going on with Terra and Luna. Some other projects that you might want to keep an eye on, you know, in regards to Tron, and the other one was Phantom.
Yeah.
So look, 100% of the time so far, these stablecoins haven't worked out. And I think that's where you want to kind of keep your eyes.
Yeah, I think that's it. I'd say avoid Luna and treat the new project with,
Yeah.
I don't know.
All right. Hey, make sure you guys all tune to that next episode.
That one is going to be a banger.
All views expressed by speakers on the BeanPod are solely their opinions. You should not treat any opinion expressed on the BeanPod as a specific inducement to make a particular investment or follow a specific strategy, but only as an expression of their opinion. This podcast is for informational purposes only.